Today I want to talk about confirmed and unconfirmed trade setups and also higher probability versus lower probability trade setups. So first of all, let me get you orientated to what we have here. This is about the U.S. cash session start time, very near 8:30 U.S. Central Time. This is the Russell 2000 futures contract. You can see through the night session the Russell came off some recent highs, had some lower pivot highs, so I have these lines drawn showing you how the market is, as you can see it from a pure price action standpoint, is trying to stair step down, but we do have a divergence. So we do have a divergence, and the market then lifts out of that area. We start to get some higher pivot lows. We do have a pullback, about equal pivot lows, and we get what's called a flip trade setup, and then right after that a turn trade setup. Now what's decent about this setup is that it's after a divergence. The market has already transitioned to positive, meaning the TFT Momo indicator is now reading a slight positive shift in the momentum, and then we get the setup. Now when we get the setup, it's in the midst of no positive green bars, but at least there's no negative red bars. We have dots, but I'm going for the bars here to see whether it's confirmed or not. I'm getting the setup, and at this point we could call it neutral. It's not showing me positive bars at the time, but it's not showing me negative. But the setup is after a divergence, and I tend to like those type of setups. So I might take a shot there to the long side. We are out of the open, market didn't sell off through previous pivot lows, and we're getting some lift, and I don't see any reason why it would be bad taking a shot at that. It's not necessarily a confirmed setup. To have a confirmed setup, I would need a long setup with the cyan bars and have green bars showing. Here's an example of a non-confirmed or an unconfirmed setup. I get the TDI paint bars to shift to cyan. I get a flip trade setup, but at the time I have red bars plotting. The red bars are showing me a dissipation in the downside price momentum. So that's good if I want to go long, but I still have red bars. So getting long when I have red bars, you can take those trades if you want, but we call those unconfirmed. We feel that is a lower probability environment than taking a long setup in the midst of positive or green bars using the TFT Momo indicator that we use. So here the market, in a sense, is kind of tightening up its range. We did have a divergence, but now look at this. The market lifts, stalls twice, very, very light upside price momentum. A matter of fact, the upside price momentum stayed contained within our chop zone meter, or the chop meter. So we have just minuscule amounts of upside price momentum. Then the market switches colors here. The TDI paint bars go back to indigo, and then I get a short setup. I get a flip setup and then a turn setup. These two setups, in my opinion, are very high probability setups. Market had a divergence, lifted, the market was unable to trade higher. So right here, the market is stair stepping down, giving us lower pivot highs. And right as I get the flip trade set up, it's right in the midst of additional lower pivot highs. I like getting short into lower pivot highs. I like getting long into higher pivot lows, just from a natural basic price action standpoint. Now some might say, okay, this trade's a little bit risky because I haven't broken out of this range of price action yet. That's fine. At least when I get in here, I have a little bit of movement. If the market comes down, can't seem to break through this pricing level that's held in the past, and let's just go ahead and mark this. So if the market for some reason could not come down and break through this level, then that's fine. If we get a bounce, just get rid of your trade at break even or slightly better. Here's price. We have a little bit of distance at least for price if it can work lower to take a look at this thing and see if it's going to break through or not. If a person felt like taking this trade is in the midst of a range, that's fine. You got another setup after we did start breaking through, and not a bad setup at all. So in my opinion, these are both very high probability type short setups. This setup, I'd have to call it a neutral because I didn't have any TFT Momo bars one way or the other. I do like the setup that it came after a divergence had just played out and the market started to create some higher pivot lows. In this case, recent equal pivot lows, and then I get the setup. Not a bad setup. It didn't work, but that's fine. If a person got into the trade, they would have stopped out and lost a few ticks on the trade. This trade obviously worked. This trade obviously worked for hitting a well over, at minimum 2-to-1 reward to risk target or greater. We always advocate never take any trade setups without at least going for 2-to-1 reward to risk. Additional reasons why I like this trade. Market has some very weak upside price momentum and snaps back into negative or downside price momentum, and I get my trade set up in a confirmed environment. I get my secondary opportunity set up in a confirmed environment with growing downside price momentum. So both these trades, in my opinion, are higher probability setups. They're both confirmed. And I like the fact that the market TDI paint bars went from cyan to indigo after what you could call a failed attempt by the market to break up and start trading higher. So market here, lower pivot highs. Market continues to make lower pivot highs. Within the recent range, I get a short setup, and then outside breaking out, I get a short side setup. Both of these setups, in my opinion, are high probability. This would be neutral probability. This, in my opinion, anybody getting long here would be slightly lower probability because I'd be getting long on a flip trade. And let me just mark that. I'd be getting long in a flip trade in the midst of downside price momentum that I still have evidence of. And just target a few more. Here's a flip trade to the short side. Here is a turn trade, 2 turn trades back to back. I'll just mark one of the two to the short side. Now, at least when these were hitting, we were right smack in the middle of our recent pivots to pivots price range. And at least at the time, we did have some red bars printing on the TFT Momo. So at least if a person for some reason decided to get short here, they got short right out of the US Open. If you're into that, taking trades right out of the Open, at least both of these short setups were in the midst of negative bars printing on our TFT Momo. So at least these both would have been confirmed setups. Here, though, the prime reason why I think the trade setups are very high probability is the market is showing a continuance of stair-stepping lower with lower pivot highs, and I get my setup on a recent lower pivot high after price momentum just failed. So upside price momentum fails, market snaps back to indigo on the TDI trend direction indicator paint bars, and then I get my setup. Secondary setup if you didn't want to take the setup right in the middle of all this range action. I do think, though, that the growing and building downside momentum being indicated on TFT Momo after a very weak upside attempt makes that trade setup very high probability. And once we've actually broke through a secondary setup, if you didn't get in here, again, another very good short side setup there with the TFT Trend System. So with the TFT Trend System tools, our objective isn't all day long to be taking every single trade setup that appears. We do use some discretion. We use our TFT Momo, and we then qualify the trades. Are they confirmed? Are they unconfirmed? Do I have some price action backing up the setup? Meaning, am I getting short into some lower pivot highs? Am I getting long after a divergence or getting short out of a divergence? So all of this is handled within our Quick Start training, where we show you what to us are the highest probability of setups and what are the lowest probability of setups. And in the end, then you work your trades. Always target trades with 2-to-1 or greater minimum reward to risk. So just wanted to show you real quick how we use the TFT Trend System to determine whether we have confirmed or unconfirmed trades, and how we use the system to determine what are lower versus higher probability setups.